following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys had a good weekend. Man, rode my bike 42 miles yesterday. Still reeling. The furnace is still going. On the euro, let's take a look at the 108.86 area. This was kind of the profit-taking area. Where I love how this thing is not really bouncing. That's the good news. So, again, beginning of the week, pierced it a little bit on Friday, came back and pretty much closed right on that level, and been as low this morning as 108.60. So the longer this thing hangs around in this area, the more I think there's an opportunity. And again, we bounced a little bit this morning, but the more I think there's an opportunity, considering there's really nothing down here right now except that weekly unfair low, to really sell daily closes below that area and possibly sell retracements up into that let's just state it again, 108.86.87. Again, I don't think it's time to buy this particular instrument. I know we've kind of come down a long ways here, but again, it's kind of a wait and see situation. It's done what it needed to do. I actually made some points off this myself. Yes, John Logan did make some points off the trade, and now it's just kind of like wait and see. If it continues to fall farther south, keeping some contracts on, I think 104 is definitely in order here. And let me go back in history a little bit here. There's the 104 area, and we're basically eclipsing those lows that we had back in March 2015. Seems like it was yesterday, but again, I think that's the long-term trade, and the long-term goals is to at least get down there. I've been looking at this as a long-term kind of investment type trade on the short side, if that can be coined that way. So keeping some contracts on is not a bad thing on this one. But again, you've reached some targets. You should be lightening up. We talked about that Friday, and now it's kind of a wait and see. And if we can rally, again, you've got some selling points here back up in the 109.88 area, and you've got some breakdown situations below that 108.87. Again, I like how this trade's finally developed. But again, trading is trading, and we have to just kind of take, what's before us as far as the profiles and those inflection points related to the profiles. Here's the yen trade. I like how this one's acting a lot. We talked about this and this one. This is one of, well, again, Joey and I were talking about what's your favorite trade right now last week, and he had mentioned the dollar, which I'm totally on board with. You guys have never heard me utter the word short the dollar ever, and the yen trade. So again, trying to find that bottom, which was found now at that 134 area down below. These are all levels within our scanner. I'm going to show you that in a little bit. And finally breaking stride. First time in a long time. We had a little bit of a fake out before back in August, but again, we are consolidating above that weekly unfair high. Again, what's my favorite trade? My favorite trade's the yen to go back to 110. All right, that's the long-term move on this one. Okay, so again, dollar and volatility were Joey's picks. I'm on board with that too. Volatility in the S&Ps, and then we've got, or the VIX situation, and then we've got this yen trade. And we've also got the euro, which kind of completed what it was supposed to be. So those four products, the VIX, the dollar, the euro, and the yen, really, really giving up some points in the right way now. British pound, I still don't think you have a lot you can do with this at this stage. Here's where we're at. We've got a really wide profile on the daily down here, and you've got to take a chance, in my opinion, take some shots, pick some battles around those inflection points, 120.41 and 124.97. We're just kind of surfing around here. You do have a chance to pay attention to a POC, this blue line, the top of the mountain, the mode of the profile. Remember, this is the most printed area. It's not the mean of the profile, because then it would always be in the middle of the profile. So this is the most well-traveled area, and this is kind of the top of the mountain. You can see how it was, paid attention to last week when we got up into that area. But again, I think the bigger, I don't know why I said bigger twice, but the the more impacting areas to really kind of lever against are those outside envelopes, which are 120.41 and 124.97. I've completely beat a dead horse to death on that one. There we go. Somebody in the den's court decision on Parliament vote coming up. If approved, can be immediate juice the GOP. Yeah, GB. Yeah, and you don't know how that's going to work out. So how do you, if you have some biased opinions about those particular type events, here's the Aussie dollar, while we're just showing this while we're finishing up with the British pound. Put a hedge on. I mean, don't get shaken out of the trade. If you think the British pound is going to cave in, based on some odds, and there's plenty of odds in the you can find some pretty good probability type numbers looking at the betting sites, especially the ones that they bet on everything, political, the whole 9 yards. If there's some odds on that, you feel good about them, put the hedge on and put the trade on, put the hedge on, and kind of walk away. And when it happens, it happens. If it doesn't happen your way, then your hedge is kind of the insurance plan. Aussie dollar, we've definitely come back to support on this one and started bouncing. I completely think we will get back above 77 on this. I'm looking at this only from the long side. UK betting probably, yeah, there's a ton of sites in the UK that can give you some really good information. It's really weird getting money back from some of those sites. So if you haven't experienced it, let me tell you from experience. You got to show the electricity bill and all kinds of crap, and then they might send it to you within 3 or 4 months. So beware. Let's take a look at the dollar really quick. And let me get that up for you. Sorry, guys, we're on another server here. Here we go. Here's a dollar. And we're going to talk a little bit more about the dollar when we come back, folks. Here's the daily profiles here and the way the price action is right now. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. We're looking at the dollar. Again, really no... And, shorten this thing, in my opinion, you've got some contra trade opportunities. I'm going to show you those on the 240s. But again, we're kind of, where's the leverage? Where's the long-term trend? Obviously, if you look at this, you could say, well, wow, the trend could be ending. It's kind of done a moonshot here. But you got to keep buying support in situations like this until we're told differently. I mean, sometimes these moves, like Joey was talking about last week, I mean, these things really, the dollar really hasn't gotten going in one direction in a while. It's kind of been stuck, and reaching 100, we've kind of gotten close to 99 already today and backed off, but reaching 100 is probably in order here. Here's the 240s. Obviously, you can use these shorter term profiles to try to, you look back in time. I mean, these 240s are very powerful. You can use them to play some bets, or not bets. This UK thing's got me going here. Play some trades. 98.79, 98.80 is the top of the 240 profile. These are short term. So you've got some, going back to what I was saying originally, you've got support at 98.35. So if you're waking up and you haven't touched a dollar in a decade, you want to kind of get your toe in the water. I mean, that's the stronger scenario, is, again, staying with the trend, buying support 98.35. There it is. Here's that contra trade, kind of play with fire, contra short type scenario, that you've had at times on this. But again, the odds are probably continuing to turn the wrench the same way on the dollar on the long side. And that euro spinning around down there on those weekly unfair lows, remember, that's about a 30-some% inverse relationship minimum, is, doesn't look very healthy that it's wanting to bounce, and therefore that dollar, finding support 98.35 would not be a bad thing, in my opinion. Somebody's saying it's a bet. Yeah, it's, you tend to agree there. S&Ps, we're going to talk about this in a second, but let's excuse me. Let's Still recovering from my bike ride yesterday. My bi-monthly bike ride. Here we go. Let's take a look at the bonds. You know, we've talked a lot about not shorting these things. Here's the December. So you got 166 up top. You got support at 164, basically. Here's the 240s. You know, you reached a little bit of a top of the short-term profile, 165.07. So what do you do with these things? They're right in the middle of a fair auction here, and they're, you know, below profiles on the long-term weekly. I kind of think this is a no trade. You want to at least kind of focus on the 30-year, in my opinion, around these inflection points, 164, 166, pretty much right smack dab in the middle, 165 right now, right in the mean of the profile. So I kind of think it's a little bit of a, I mean, I'm blocking out the short side constantly on these things, but it's a little bit of a no trade. If you're looking to kind of be a little stingy, you can use these 240s to kind of take profits here. But again, I don't think you know, it's not a lot. I don't know about putting a lot of mental capital towards this particular trade right now. Okay, setting something up. Excuse me. So that's the 30-year. Let's take a look at crude really quick, and Joey may be joining us again today. Excuse me. December crude. Excuse me. Here's the long-term weekly, 51.98, 52, kind of backed off. Not a huge fan of being long this anymore. 49, 49 is a big inflection point down below. That was kind of big resistance up top there. But, you know, what do you do with crude now? I'm thinking we're going to sink back well below 49, possibly even to the 47s of the world. So, you know, how do you play a trade right like that? Right. Excuse me. God, I'm off. Ooh, my English is bad today. What do you do now? You can play defense against 52 up top, put some stops above there, but I think you've got to wait and see right now. Getting below 50 is a big number for this particular product, and definitely a daily close below 49.49 would really kind of, I think, start sealing the deal that we could start really drifting down farther. 49.49 and 49.52, that's, you know, the POC on the weekly. Not a real wide profile here, but if we can get across the top of the mountain there and get below on that daily, I think we could start seeing the 47s and 46s and a halves of the world probably pretty quickly. Okay, Joey, are you on with us?
Yeah. Can you hear me, John?
Yeah. Thanks for coming on today. We've got Joseph Chong from Hong Kong. Hey man, what's on your mind?
What were you? Sorry, it came on late today. What were you just talking about?
I was talking about crude a little bit, just kind of getting below 50, to really get excited about it drifting down farther, 46, 47. And I'm stuttering today, Joey. I took my bike ride yesterday, put my brain in furnace mode, so I'm kind of still recovering here.
So I agree on the crude trade. Yeah, maybe for about 47 as well. I think with the dollar clearly breaking out. I mean, the dollar is having a little bit of a break from the last few days. It's had such strong moves. It is having a little bit of a break, but crude has actually been strengthening along with the dollar. So a lot of the good news from the crude land in terms of people talking about cutting and stuff has all come out. So I do expect crude to take a break at least. I'm not certain that this is going to be intermediate top or whatever, because I really don't know what the end direction of crude is right now, because the chart still looks pretty constructive, but short term we're very overbought, and I'd like it to pull back to about 47, 48 level.
No, I agree with you. I think trying to buy support on crude right now is a low probability trade. I'm with you on that one. Can you hang on, buddy, or we're going to go to break and then we'll be right back? Okay, guys, we'll be right back, and we have Joseph Young on today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And we've got Joseph Young on from Hong Kong today. And Joey, first question I have, what are your thoughts on the AT&T Time Warner situation?
Frankly, I spend as much time thinking about that as the elections, because it's a waste of my brain power. Because it's 2 very old school companies trying to merge in order to survive, right? And there's so many disruptive companies and technologies coming along that they really have to do this in order to survive. So uh, if if the regulators had any real kind of sense of what's actually happening, they should just let them merge and lay off a bunch of people, because it's the right thing to do. I mean, either way, they're gonna be laying off people regardless of this merger or not, because both companies are just fighting to stay alive, I think.
Wow, interesting perspective there.
Yeah.
Well, tell you what, we're going to take a look at those two stocks later, but we had a question in the den. Somebody was wanting to know about the copper situation in China. Are the banks still in trouble regarding using copper for long collateral? Copper looks like it's breaking down again. You talked about it last week. I think we talked about it together. It's just not looking like a decent kind of pick it up on sale type situation at all.
No, it's.
Do you
Yeah,
think
I
it's
mean,
just
I
it's
think
just worth
the copper situation is still. I mean, there is still an issue in China. I don't think that's been fully resolved, but then again, it's a lot better situation now than it was a year ago, and
Okay.
and so this 200 support is a very, very strong support for copper, and unless China's situation gets a lot worse, which at the moment it's not. I mean, they could start to announce all kinds of things, but at the moment it's still okay. I don't really expect it to break down. I mean, this 200 level is actually pretty strong support. We're sitting at 208.85 right now.
Mm-hmm.
I expect it to hold for a while, pending new news, right? Like if we get new news that China's doing a lot worse than it says it is, or it starts to put on some slowdown measures in terms of curbing back all the real estate loans that they've been giving,
Right.
then obviously any of those new talks will be new information for this market, right? And if that's the new information, then it will merit a breakdown of the 200 level. But until we get that, yeah, I'm not going to bet on a breakdown.
Well, what could they do? I mean, we talked a lot. I mean, you're the one that brought up the real estate market over there a couple of weeks ago.
Yeah.
Not
And then-
not that it was some mystery you uncovered, but
No, it wasn't a mystery, but it was highlighted a week after we talked, or 2 weeks after we talked about it, and
Right.
as a big Wall Street Journal article and the Bloomberg article about how many trillions of dollars are have the consumer credit has gone up by trillions of dollars, and that's what's been keeping this economy alive.
What does China do to? I mean, they can step in and do a lot of different things. They've already proven that before in different kind of places in the different segments of the economy. Try to kind of. Well, what do they do about that situation? Do they just? You talked last week about. It's not that big of a deal. It's not going to probably affect the markets. They're going to kind of deal with it on an as-needed basis. But what do they do to? I mean, do they even care to mitigate that situation, the real estate situation?
I don't think. I mean, they need to curb it at some point, but at the moment, it's not as bad as the U.S. situation, where they were giving away loans with no down payment to anybody, right? And
what's the standard loan procedure over there, if you don't mind me asking? Like, in Shanghai or Beijing, or even Hong Kong. I mean, like what? Like, because over here,
Hong Kong
I bought property back in
market.
I bought property back in 2007, and I'm literally they didn't even want to know anything because it would stop the loan going through. You know, I mean, they didn't want any details. They're like, okay, we can give it to you for no down payment and let's get going.
Yeah.
I mean, what is it that? I mean,
it's not that bad over there. On the consumer side, they still require, 20-30% down payment.
Okay.
In Hong Kong's a different market, so we're not going to talk about Hong Kong.
Right.
But China's,
or Macau.
Yeah, Macau is also a different market.
I'm sorry, I didn't mean to bring Macau up. Go ahead.
But Hong Kong's, China's entirely on its own, so they're still requiring some down payment and stuff. But in terms of the commercial lending, a lot of stuff that has rolled over like 5 times. The projects aren't even real, or there's some just completely defunct projects that are still.
Do they still have the ghost city type things over there that are, these?
Yeah, they do. But
really,
yeah. But the things. I mean, there are still definitely ghost cities around. But the properties that are going up are still in highly populated areas. So, you still, you can talk about the ghost cities, and those are obviously worthless or worth very little.
Right.
But you shouldn't. What Chanos and these guys do is they kind of, they take a picture of that and then they go, "Well, this is the whole China property market," and then it freaks everybody out, but when you actually look at it, that's actually a very small part of the Chinese property market. The rest of the Chinese property market, you're literally talking about
speculation in some of the larger cities.
It's speculation in the larger cities, but I mean these are getting they're fully rented out, so
right.
These are full cities. I mean, you can't really get. It's very hard to rent a place in Shanghai or Beijing. These places are full. So
really?
It's not. Yeah. So
Man,
there is a bubble there because it's a government-induced debt bubble there, but it's not one that's gonna come down is imminent to come down immediately.
Right.
It'll take some time.
Can you hang out past this break?
Absolutely.
Great. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology.
Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We got Joseph Chong on with us from Hong Kong, and Joey, what would be the reason? I mean, I was thinking about this when we were talking about the so-called ghost cities or ghost buildings or whatever you want to call them. Were those just, what were those? I mean, those were built kind of in the middle of nowhere or something, and then there's just no reason, it was just a bad idea, or why would they not be populated?
Yeah, I mean, the ghost towns are mostly because the banks were giving out, so they were telling people that telling companies and SOEs or state-owned enterprises and property companies that we will give you money, please build something. And so if
but what's
you're
their
being told that,
what's their version of building something? I mean,
well, and building something means that somebody said, okay, well, great, let's come up with a plan. There's a plot of land in the middle of nowhere that we can give you. The local government will give you, and then just build something. And so the local government gives them a plot of land, and they build it, and it's out literally in the middle of nowhere. So you have a lot of ghost towns because they were built because of bank lending and local governments basically saying, look, we have a piece of land that we're not using, build something on it, but there's a good reason that that piece of land was never used, is because it's in the middle of nowhere.
Right. Well, but those are the kind of snapshots that they kind of flash every once in a while. It's not a prevalent situation over there, or is it?
No, I mean, you still have the cities that are full right now.
Right.
So,
man, it scares every time I step foot into China, it just scares the mess out of me. How many? I mean, the feeling, the buzz feeling there. I mean, it just, and there's people everywhere. Oh my God.
Yeah.
It's packed.
It is packed, and it's getting more packed. So. More and more people are moving out of rural areas into the city. So, and it's happening so fast that it's incomprehensible when you think about it from the U.S. point of view, because there's so little movement in the U.S. and there's just not that much migration going on in the U.S.
I mean, to put it in perspective, the Chicagos of the world are not even considered like mid-tier cities there, I mean.
No.
Yeah, I mean, it's incredible. I mean, you got to see this for yourself. It's insane.
Yeah.
And
So
you know,
yeah.
you
So
go to
the ghost cities are an exception, not the rule, right? And there are
yeah,
definitely ghost cities out there, but it is not all over China like the press makes it out to be.
right. Well, can we talk about the S&Ps for a bit, because we
Yeah.
kind of got through 2033, 34, bounced off of that, and I was not happy about that. I thought we were going to head lower and stay lower, but again, we've got these lower highs and higher lows. Like you talked about, maybe a VIX trade was in order more than trying to pick a direction here.
Yeah.
Any comments?
Yeah, I think the VIX trade, you basically do a trail trade or something like that, where you're not, or stop buy or something like that, where you're not trying to pick the bottom, but you want to see that reversal come first, because the market could still drift up, and things like the VIXY ETF will, even if the VIX doesn't move, that thing goes down, right? Because of the monthly rolls and stuff. So
Right.
that's getting eroded.
What's that symbol?
A VIXY. I mean, there's a few of them.
Right.
VXX, I think, is the other one.
Okay, so here's the VIXY. Ooh. Mama.
Yeah.
Woo.
All
right, so
you can't even look at those on a weekly chart or on a daily chart, because it just, and then they have to reverse.
I've got a daily up right now. What do you? Let me maybe pull up a. Oh, this is ugly all the way down. What would, I mean? Is this something? Again, do these have options on it? I can't.
Yeah,
I don't
they
know.
do. They
Okay.
do. It's
Okay.
options on craziness.
Gotcha. Okay.
They're
Wow.
fun to play. But man, is it hairy.
Don't put your life savings into it.
No.
Got
Please
it.
don't.
Got it. Hey, we talked about the yen earlier.
It's more
Go ahead.
fun than going to the casino with those things.
We talked about.
All you have to do is trade those and watch a YouTube of dancing girls, and you'll get, the same feel as in a casino.
Gotcha. Let me do this. Let me pull up our currency screen here again. Can you talk about the yen? I mean, we talked about it earlier, and it's nice, really, really cool action here.
Yeah,
really,
it's great action.
Really cool.
Yeah, it's staying above the 103.50 level, which is the key level. That's the weekly unfair high, and that's also, I mean, you look at the charts, it's a clear neckline there. If we break through that and stay above that, now this will be if we stay above that this week, then it'll be the second week that we're closing above that, and it's just very positive.
Fundamentally, could you say anything? I mean, we talked about this, just brushed on it, but why would this thing continue to go up?
Because the U.S. rate differential will become steeper and steeper. So,
right.
Yeah.
Simple as
Same
that.
with the euro. Simple as that. Same with the euro. The euro I see going down to 104 level, and perhaps it'll bounce a little bit from there, and then over the next 6 months it could even go lower. I mean, we're talking about parity on that. So. And all because of the interest rate differential getting steeper and steeper, and then, or the Chinese yuan has broken out further. I mean, we talked about that great old cup and handle formation,
right.
and
right.
Yeah, it's broken out of that level, and it kept on going. So
yeah. So here's the one. Wow.
Yeah.
Man, that thing went up quickly.
Yep.
Let me see where we're at here. Okay. Yeah, so I'm
I mean,
showing.
that's a fast move for the Chinese yuan. It's
No kidding.
Yeah, I mean, usually it doesn't, because it's a controlled currency. It doesn't move that fast.
Right.
Yeah.
Well, listen, you want to close the show with me? Stay on for another 5 minutes?
Sure.
Okay,
Sure.
Cool. Great, guys. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We've got Joseph Jong on. He's going to help us finish the show here. Joseph, the Shanghai, talked about the yuan a little bit. Somebody in the den had said, let's see, same kind of move in the yuan was attributed to August 2015 market collapse. I'm trying to figure out, let's see here. There's August 2000. Yeah. Okay. So the Shanghai is kind of relating that to that. I mean, the Shanghai kind of moved actually above weekly profiles again here. It's kind of been finding support. Is there any relevance that you can see right now to that currency kind of skying, and any type of market relationship here that you see impendingly happening?
Well, I mean, we talked about them pulling back the throttle in terms of all the economic stimulus that they've been giving in terms of just giving banks free credit.
Right.
And so if they pull that back, obviously the economy will slow down, and then the renminbi, the dollar renminbi will go up. The dollar yuan will go up, right? So the yuan will weaken. So that's what we're starting to see a little bit here. Maybe the currency market is already anticipating something, a move by the government. I mean, I don't see them moving yet, but it may not be that far, because when you see that the local property markets have moved already like 60 to 80% in 1 year, then it can't be that far off, right? So
that's incredible.
Yeah.
Taking a look at. I mean, we've got some earnings coming out this week. I think. Let's see here. Amazon. Is there anything but good news that could come out of that company as far as? Well, what's your thoughts on it? Go ahead.
Well, the earnings are coming out soon. We have I think Goldman just upgraded it today, right? So
yeah,
to 1,020. To 1,020 target price. Goldman usually doesn't come out a day before earnings and upgrade something unless they probably have a pretty good hunch about it. So
yeah, well, we talked about this last week, folks. I'm showing this is last week's weekly bar, Joey. I'm showing right now 790. It didn't even get down there to support. This profile appearing below price action is always relatively bullish.
It's very bullish. If you look at the big three or the big four, Apple, Amazon, Google, and Facebook, right?
Oh, yep.
All those have very similar charts if you look at them.
Yep.
So let's see.
Facebook, man.
Yeah.
I didn't look at that on Friday. What a freaking move.
Yeah. So Google consolidating since July and is starting to break out, but it's still got a profile that needs to basically break out above 830, which, I mean, we could do that easily today.
Yeah.
Pretty easily. So if we get that today, then that's a breakout already.
Is there
on Google? Yeah. So all of the four horsemen are kind of all looking in sync, all looking like it wants to break out to the upside. But at this point in the market, the whole market as a whole is very tired.
Got it. Hey, man, thanks for coming on again today.
Okay, John. Great. We'll talk again tomorrow.
Okay. Thanks, guys.
All right. Take care. Bye-bye.
Okay.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.